Last week, I think, was truly exceptional. We had 4 strong bull days, and the weekly chart has the biggest bar since back in July, maybe. I think, maybe since here, October, November. But in any case, it's the biggest bar in more than 20 bars, probably the biggest bar in 50 bars. And it's clearly a bull trend. Whenever you get the biggest bar occurring late in a bull trend after more than 20 bars, the breakout is more likely to be an exhaustive buy climax than the start of an even stronger leg up. And a lot of times you'll get a pause and then a second leg up. However, probably within the next 2 or 3 weeks, we'll come down to last week's low at a minimum target. And if we get there, the bears will try to get a measured move down based upon the height of last week's range, and that would take us down to around 2,600, which would be close to a 5% correction. Bulls are hoping that we just accelerate up, but I think the odds are against it. I've used the example of Bitcoin. And the other day, over the weekend, I used Qualcomm as an example of a blow-off top. Here's the weekly chart of Bitcoin. That's a blow-off top. This is extreme, and it lost about 70% of its value in the course of a week. The E-mini is not going to do that. The E-mini is not going to crash. But whenever you get an extreme buy climax, this is the ETF that follows Bitcoin, and similar thing, extremely strong breakout late in a bull trend. Usually it's a climactic end of the trend, and the target is the bottom of the buy climax down here. And you can see it got there. And in the E-mini, it's the same thing. Weekly chart, smaller version, but the target is the bottom of last week's buy climax low. And then from there, the bears try to get a measured move down, and the bulls try to get a double bottom and a resumption of the bull trend. We ended Friday with a parabolic rally. We accelerated up. Whenever you have a buy climax like we had on Friday, and the day ends with a buy climax, you know some things. First of all, there's only a 25% chance that today's going to be another really strong bull trend day. There's a 50% chance the bulls will get some follow-through buying in the first hour or two. And there's a 75% chance that there's going to be 2 legs sideways to down today, lasting at least a couple of hours. It usually begins by the end of the second hour, and often begins right on the open. So the one thing we're most confident of today is that we're going to have at least a couple hours of either a trading range or a swing down. Micro double top, but the final bar on Friday was not a good sell signal bar. Big bar, pair of big bars here, so consecutive buy climaxes. That often leads to a pause in the rally, but there's a 50% chance we're going to get some follow-through buying on the open, or at least within the first hour or two. Big down here, and a gap down, big down. The bears see a micro double top, and they're looking for a measured move down, testing the breakout point, which is likely. It's kind of a spike in a parabolic bull channel. Usually converts into a trading range, and the market likes to test down to the beginning of the channel. So this area is a target of any sell-off today. We're always in long, but with this reversal down and then the gap down here, a lot of bulls are hesitant to buy after the buy climax. So we may have a quiet open, whereas the market decides, is it going to get that rally, 50% chance of follow-through buying, or have we begun 2 hours of sideways to down trading? What are the chances that today will be a bear trend day? I would say, I don't know, right now pretty small. But if we get a collapse, if we get this 1 and 2 early on, then the odds would increase that we could possibly even reverse all of Friday. Right now, it's not likely. Right now, it looks like doji first bar, big up, big down, big up, big down. Looks like we're having a trading range open. How many was in short yet? No, the bears probably need a couple bear legs, a couple bear bars. But it does look similar to yesterday, Friday, bar 1. Can you buy this? I would not. It's a pretty impressive bar, and the context is good. 75% chance that we're going to get at least a couple hours of sideways to down trading that begins within the first 2 hours. Right now, it looks like it's beginning with the first bar of the day. I keep saying sideways to down because a lot of times it simply goes sideways. That's important that the bulls are able to put a big tail on the bottom of the bar. We have 2 legs down, 1 pullback, 2. Does not matter that the pullback went above the top of the start of the first leg down. It's still a 2-legged sideways correction. Bulls want an opening reversal up from the moving average like they were able to get on Friday. Remember, I said there was a 50% chance the bulls would get some follow-through buying in the first 2 hours. And they're hoping that this is simply going to be an opening reversal up, an early low of the day, and another bull trend day. I said there's only a 25% chance of a strong bull trend day today. Lots of big reversals. Big up, big down, big up, big down, big up. So this is probably going to be a trading range open. Confusing, right? Big up, big down, big up. That increases the chances of a trading range open. Bar 2 disappointed the bears by having the big tail below. If bar 3 closes on its high, then it's similar to bar 3 yesterday. However, not a high probability buy. The sell-off from yesterday's close down to 2, the 2 low is too big. Plus there's a micro double top, so it looks like an open similar to Friday's. Limit order bulls bought the 1 low. They bought yesterday's 81 low. They bought the 1 low because of the bull body and a doji. They bought more lower, and you can see we went 1 tick above the 1 low. Even though we had a sell-off on the first bar, the bulls were able to make money. That reduces the chances that this is the start of a big bear trend. Very similar to yesterday, bar 3. Here, a sell-off and a bull bar, possible low of the day, but big bear bars here, good sell-off from yesterday's close here. More likely this is going to be an early trading range, just like on Friday. Possible low of the day, you can swing the trade up, higher probability to wait to see if we get a couple decent bull bars. There's also a 75% chance we're going to get a couple hours of sideways down trading that begins by the end of the second hour. That also reduces the chances that this is going to lead to a big bull trend. Reversal up, but the 3 body is not as big as the 2 bear body. So not a strong buy, but not a strong sell. Bears do not want to be selling above bar 3, a decent bull bar reversing up from the moving average in a bull trend. It's similar to Friday. Nobody wanted to sell above bar 3 there either. We're left with confusion, multiple reversals up and down and up and down and up. And that is a trading range open. And we're in the middle of that developing range. If we do rally, the rally will probably be a bull leg in a trading range. In other words, it probably will reverse by the end of the first or second hour. But a bear trend day is unlikely as well. We have a strong trend on Friday, and we could not get consecutive strong bear bars today. The bears are going to try for some kind of a major trend reversal here. They do not have a good wedge top, and the only other major top would be a major trend reversal. And therefore, they'll try to get a small trading range with a lower high. If they cannot get a lower high, they'll try for a higher high. If they get a higher high, they'll have an expanding triangle top. 1, 2, 3. We're still always in long, but lots of reversals, so trading range more likely than bull trend. Consecutive bull bars, but not all that big. You can see the open of 4 is 1 tick above the close of 3. That tells you that a lot of bulls bought the close and the market went up 6 ticks, which is far enough for the bulls to scalp out with 1 point. Well, that's not really true. It went up 6 ticks from the 3 close. They get filled on the 4 open, and it had to go up 5 ticks. Okay, if they were able to get filled on the 4 open, they did in fact make their 1 point. It had to go up 5 ticks from their entry. If they hit by the market at the close of 3, they were probably filled on the open of 4. It had to go up 5 ticks, which it did, and it reversed down. That tells you that a lot of the bulls who did buy at the close of 3, they get filled at the open of 4, and they scalp for 1 point. If the bulls are scalping for 1 point, they're not confident that this is the start of a strong rally. Can you sell below 5? Lower high major trend reversal. On the open, you sometimes get major trend reversals where the legs only have 1 or 2 or 3 bars. In other words, they look like minor reversals, but they behave like major reversals. Any one of these reversals can result in a trend. The reversal up on 3, this could be the low of the day. Reversal down below 5 could be the high of the day. But stop entries for swing trades, really not a very good way to trade when the market is reversing every 2 or 3 bars, which it's been doing for about 10 bars now. A lot of times you wait for this, for multiple reversals and a triangle with a bull bar above the moving average, or a triangle with a bear bar below the moving average. So this is what the open might be. This day has much more prominent tails, top and below bars, more likely to be a trading range day. Today we've had 3 trend bars, bars with pretty big bodies and not big tails. I think we'll get some kind of a swing up or down, but I also think that the swing will end up as a leg in a trading range. For the bears, lower high major trend reversal, decent sell signal bar, but big enough reversal 3-4, probably a limit order market and buyers below. Similar to Friday, we get the reversal up 1 bar. Today we have 2 bars, and then we had a big bear bar. And today we have a bear bar, bar 5. Confusing open usually means limit order market and sideways. You can see we're stalling 4 ticks above the 5 low. Consecutive bull bars, so some bulls bought the 5 low and placed the limit order to sell 4 ticks higher. Part of the reason for this stall right here is you have a lot of bulls with limit orders trying to sell out of the longs that they bought at the 5 low. For the bulls, a double bottom or high 2, opening reversal up from the moving average, a breakout on 4, a pullback 5-6, but 6 is not a very good looking buy signal bar. I think we still do not yet have clear direction. The market's deciding, is it going to get followed through buying after Friday's rally, or have we begun 2 hours of sideways to down trading? The limit order bulls have bought the 5 low and hit their limit order twice at the 6 high, 7 high, and a lot of those bulls are now selling. They tried to scalp out here, they tried to scalp out here, unable, and now they're selling out of their buy scalp. Most traders should wait. Possible high of the day 5, possible low of the day 3, but it's neutral, I think. Not a good buy signal bar 7. I still think the bears have not done enough to make it always in short, and therefore always in long. And the bulls see 5, 6, 7 as a pullback from this reversal. But we're neutral. We're in the middle of a trading range where there have been many reversals. The reason why the market is doing this is the market's balanced. Neither side is willing to sell low and sell lower, or buy high and buy higher. Limit order bulls giving up. By the close, bulls 4 could not get out on 6 or 7. They were disappointed by 5, and they needed the market to get back above the 4 close to get out, and now bulls are giving up. By the close, bulls 4, the limit order bulls 5 are selling out right here, taking a loss. Bears are hoping this is a lower high major trend reversal, but I still think sideways is more likely. If this bar is a big bar closing out slow, that would increase the chances that we've begun a swing down. Finding support at the 2 close, sell the close bears sold more higher, disappointed by 3, 4. They're trying to buy back their shorts around the 3 close. So we might bounce here. I left this red line here because this is a target, the breakout point on Friday. Here's the start of the channel after the breakout, so that is also a target. Good bar for the bears. Bulls want double bottom 3, and the bears want the start of a swing down. If 8 is so bearish, why did 9 open above the 8 close? Right, that means a lot of traders bought the close of 8 instead of seeing it as bearish and selling the close of 8. Trading range open usually tries to get a double top and a double bottom before there's a breakout. Not many limit order bulls buying the 7 low. Bulls, stop order bulls will buy above 9 looking for a double bottom 3. A lot of bear bars so far today, decent bear bars closing below their middles, near their lows. Reduces the chances of a big bull trend. Swing by above 9, higher probability to wait to see if we get 2 or 3 reversal bars, 2 or 3 bull bars. Four bars down, 3 decent bear bars. A lot of bulls will not buy above 9. They'll wait. Also close at or just below the moving average instead of above. Bar 17 Friday closed above the moving average. Trading range open, but a bull bar closing above the moving average has a higher probability of leading to a swing up. Getting near the end of the first hour. Very tight bull channel. The last bar on Friday, not a good sell signal bar. And when today traded below that last bar on Friday, there were buyers, not sellers. And that's what took place here. Bar 72 is the final. Actually, this is the last bar on Friday. It began with bar 73. We traded below it and reversed up. We tested it again, bar 9, and are reversing up again. If this first hour ends up as a doji, which it might, it would be a weak buy signal bar on the 60-minute chart, especially after a buy climax. That means it would increase the chances that we would go sideways, or if we went up, we would only go up for about a bar or so. By the close, but the bears want a double top. Lower high major trend reversal. Bulls have a small double bottom. Slightly more bullish than bearish. Bar 12 is the close of the first hour. And we're right at the high of that first hour. For the bulls, it's a high 1 buy signal bar on the 60-minute chart. It triggers if we go above 1, but not a very good looking buy setup. We're at the top of a trading range, slightly more bullish than bearish, but the rally does not have big consecutive bull bars yet. Bears still trying to get a double top, lower high, major trend reversal by going 2 ticks above. Well, actually, I was going to say went 2 ticks above 4, but it only went 1 tick above 1. For the bears, if it's a double top, usually they don't want it to go 2 ticks below. Five bull bars, low probability short, probably buyers below, but the top of a tight range. Bears wanting a 2-bar reversal, 13-14, which they have. So for the bears, it's a double top with 4 and 13. For the bulls, they have 5 bull bars. We're always in long, probably buyers below. Trading range open. A lot of the bulls are selling at the high. And then if they get a strong breakout, they'll buy again. Or if they get a test near the bottom, they'll buy again. And for the bears, this is the sell zone. But I think they rather sell with limit orders at the 4 high, at the 1 high, not with stop orders below 13 or 14. Bulls want this to be a pullback from the breakout above the 4 high, and the bears want a double top, lower high, major trend reversal. Consecutive bear bars, but they probably need one more bar, and they probably have to get below the 7 low. Bulls want another higher low, like 2, 9. We're getting a lot of bear bars today. It reduces the chances that today will be a strong follow-through bull day. Limit order bulls want 13 low, more 1 point lower. Has to get 1 tick above 13 low for them to get out break even. Okay, just did. Bulls trying again to break above the high of the last hour. We broke above it on bar 13, and we're breaking above it, but we're testing it right now. That would be a second entry for the buy signal on the 60-minute chart, a high 1 bull flag, 1 bar pullback, strong bull trend. For the doji bar, climactic rally, more likely sideways here, like this. The range so far is about 5 points, so about half of an average day's range. That increases the chances that the range will double. And it can double either by a breakout and a measured move, or by going a little bit above and then reversing down, going a little bit below, or doing it in the opposite way, down first and then up first. So far, we have a lot of bars with small tails. That increases the chances that we're going to get a breakout in some kind of a swing up or down today. Looking for some kind of a breakout, either a breakout of the 18-bar range. I doubt we're going to get a big trend. Breakout of the 8. This blue box is the 18-bar range. Broke below it, fell for about a measured move. The first 18 bars, bear breakout. They sold the breakout. They sold the pullback. The breakout can be up as well. The first 18 bars, blue box, they broke above. Did not go a lot higher. A lot of bars with prominent tails, a lot of overlap, usually reduces the chances of a big trend day. First 18 bars, the blue box. And that's the breakout, and this is the pullback. This is bar 16. We're now on bar 17. Whenever you have a lot of trading range trading for the first 18 bars, 50-50 chance the initial breakout will reverse. 50-50 chance we've seen 50-50 chance to be successful. But until you get a pretty good breakout, it's not 90% certain that you'll stay away from the other side. If you get a strong breakout, 90% chance this will remain the low of the day. Strong reversal up. 90% chance this will remain the low of the day. Here, strong breakout of the first 18-bar range, parabolic wedge, eventually got to a new low. Happens about 10% of the time after you get a strong breakout, you get an opposite breakout. More common if the day is mostly a trading range day like this. Breakout above the 18-bar range, breakout below. Breakout above. 90% chance, it's a strong enough breakout, 90% chance we're not coming down here. But we did come down here right at the end of the day. bulls need a strong breakout. This is bar 17. If the breakout occurs on bar 17, then it's strong. Then maybe 70% chance or 80% chance 2 will remain the low of the day. I always pay attention to the market around bar 18. If it's at the top of a range, I'm prepared to sell a reversal down. If it's at the bottom of the range around bar 18, I'm looking to buy a reversal up. Can you buy with a stop above the 13 high? You can, but I think it's probably better with all of the reversals that we've had since yesterday. It's probably better to wait to see the breakout and then buy after we see the breakout, either buying the breakout or buying a pullback from the breakout. For example, buying a pullback from the breakout. Even the bulls who did buy the pullback did not make much money. We stayed pretty much sideways. So lots of opportunities to buy, but the market simply did not go up very far. A lot of small sideways bars, unlikely to lead to a big trend. I bought the 13 low, but I did not buy the 17 low, and I did not sell the 15 high. It's still slightly more bullish than bearish because the bears have not done enough to look like they're in control. We had a rally here. The bears had 2 bars here, but 8's the breakout bar, and they could not get a follow-through bar. The bulls had 5 bull bars here and the new high of the day. Even though it's not strongly bullish, it's still a little bit better than what the bears are getting. Also, we have more. The market is mostly above the moving average. Bear closed below the moving average, they bought it. But they bought it. So when it's down at the average price, bulls are looking at it as cheap. But they're not willing to hold on. They're taking profits. So the bulls are scalping. So they're not confident that we're going a lot higher. Still in breakout mode, the bears are still hoping for a lower high major trend reversal, and the bulls are hoping that we break out of the trading range. They're hoping that it's a bull flag. Target for the bulls, the breakout point yesterday. Breakout pullback channel, bottom of the channel, the top of the breakout point. I'm sorry, that's the target for the bears. It's a round, a measured move down from the double top neckline, measured move down. This is one of those days that is both a breakout mode day and an 18-bar range breakout. This is bar 18. This is the high of the first 18 bars, the low of the first 18 bars. So theoretically, bulls buy above the high and bears sell below the low. It's also a breakout mode day. After the first bar, we went to a new low, reversed up. We went to a new high, reversed down. Bulls will buy above 13, just like the 18-bar range. Bulls will buy above 13. And bears will sell below 2, just like the 18-bar range. Bears will sell below 2. So both setups here have identical entries and exit. Bar 8, the bears needed one more bar. Bar 15, the bears needed at least one more bar. bar 9 gapped above the 8 close, bar 16 gapped above the 15 close. So as soon as traders saw that bear close 8, they bet against the one more bar that the bears would need, and they bought the close. And the same with 15. So that's a sign of buying pressure. That's the breakout of the 18 bar range. One tick breakout above bar 13. But small enough day plus wedge lower high. Normally I would say 90% certain we would stay above the 2 low, but I think it's less than that. Right now it's probably like 60%. The bears have a reasonable sell setup, a wedge lower high major trend reversal. And the bulls do not yet have a strong breakout. Okay, this is a test. This is a test for the administrators. For the bears, it's a wedge lower high major trend reversal, but 22 tail on the bottom, weak sell signal bar. The range right now is about, well, it's 5.25 points, and that's pretty much the minimum range that we would typically see. So the range so far is big enough. This could be the entire day's range, and we could simply stay sideways here. Do I think it'll get bigger? Sure, it probably will. Because it's a wedge lower high, the bulls are hoping to get a bull breakout above the wedge and a measure move up. The bears obviously want a reversal down below to the bottom of the wedge and then a break below and a measure move down. Not a good sell setup, still always in long, but weak breakout, only one tick breakout, and terrible follow through. So a lot of bulls are not willing to buy up here. They want to see a stronger breakout for a possible measure move up, like 59.60, consecutive bull bars closing on or near their highs. This is the breakout bar. Bulls want to get measuring gap, and the bears want the failed breakout. Similar to here, bulls tried to get a breakout. They tried again, they failed twice. Here the bulls succeeded in getting a breakout. Even if the bulls succeed, I think the odds are against a big bull trend day. We have, I think, a parabolic buy climax on the 5-minute chart and on the 60-minute chart. This week might be a small week after last week's huge week. A lot of times after a big week, this is what you get the next week, small week. To sell below 24, bull body, it's a reversal bar, closed below its midpoint, but a bull body, fairly tight channel. Most bears are not going to sell below 24. Still always in long, but not a strong rally. When that's the case, a lot of bulls, instead of buying at the high, look to buy pullbacks, even small pullbacks like this, a couple bars down, a couple bars down, a few bars down. Testing Friday's high, last week's high, the all-time high. Bulls trying to get the breakout. No sign of a top yet, so we'll probably go at least a little higher, but unlikely to go a lot higher. This is what the bulls are trying to get. They want to get consecutive bull bars. Nine high, possible low of the day, double bottom, high or low. So you're going to be thinking the 4-point bulls want 4 points above 9 to get a 4-point profit. They have to get 17 or 18 ticks above 9, which is a little bit above where we are, up to the 27.44 level. That's 18 ticks above 9. So there should be some profit taking there. A lot of room to the Globex high. All the way up here. Actually up here. No, this is the Globex high way up here. When breakouts are not especially strong, a lot of bulls look to buy pullbacks. Let me fix that. No, it's okay. It's above a bull bar. Breakout, not all that strong. Bulls buy pullbacks. And you can see one of the problems with buying pullbacks when the breakout's not strong. You buy the pullback, it goes lower. Buy the pullback, it still goes lower. So you have to use an appropriate stop, which often is further down than what you want, like below the break, the outside up bar, or all the way down here. And this is, I think, similar to today. Bulls buying a pullback. You cannot put the stop right below here. Bulls buying a pullback. You should not put the stop there. If you're going to be buying pullbacks, you have to use an appropriate stop, like below the bottom of the bull reversal or all the way down here. And this is, I think, similar to today. Bears probably selling new highs, selling above 13 or 22 or bar 81. I still think we're going a little bit higher because 90% of days have at least one 4-point trade using, from a decent buy signal bar, and bar 9 is a candidate. So we should go at least 17 ticks above, which is 2 ticks above the high of the day. The bears want the double top, but there's a magnet 2 ticks above. So I think it's a low probability short with a stop below 26. You can argue nested wedge, 1 or 1, 2, 3, and then 1, 2, 3, double top. But pretty good magnet, 2 ticks higher. So low probability stop entry sell below 26. There's a magnet 2 ticks higher. So even though we have different ways to draw a wedge, 1 or 1, 2, 3, 1, 2, 3, we have a double top. We have a tight bull channel, and we have a magnet above the high of the day. That lowers the probability for the bears selling. If they sell, can they put a stop 1 tick above 27? No, if they're selling here, I would have a stop 2 or 3 points higher because there are sellers just a little bit above the high. So it does not make sense to buy back shorts 1 tick above 27 when we know that there'll be bulls selling 2 ticks above 27. How far down does it have to go before the 9 high bulls give up? Usually, 1 huge bear bar, 2 medium bear bars, or 3 or 4 small bear bars. It looks like This might be the 3 or 4 small bear bar route. They bought the moving average here, 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 getting near it again. Still always in long, but a lot of bulls want to buy pullbacks like this or this rather than buying at the high. You can see the 29 open above the 28 close, just like 16 and 9 opening above the prior bear close. Those bars closed on their highs, right? So traders are buying the bear closes here so far, even though 30 opened above the 29 close. I'm not convinced that a lot of bulls are going to buy it. A lot of the bulls might wait for some kind of a micro double bottom and then buy. Bears tried to sell above yesterday's high repeatedly, and it could not get above yesterday's high. So a lot of the bears who want to sell now are looking for some reason to sell, like 3 or 4 consecutive bear bars or above bars, above 30, above 29. Do I still think we're going to go 18 ticks or 17 ticks above 9? I'm less certain now. Now I think it's probably 50-50. Maybe higher than 50-50. That at some point today we'll get 17 or 18 ticks above the 9 high. So what do? Do you buy above 30? Probably not. Do you sell above 30? Whenever the market has a minor reversal like this, we're probably going to go sideways. It's similar to this. Bears who are selling usually are selling with limit orders above bars, above 30, above 29, using wide stops, maybe a 3 or 4 point stop, and scaling in higher. Bulls buying have to use a wide stop as well. Below 9, the bottom of this buy climax, below the low of the day. And you can see the bulls who bought here, they probably bought more lower, and they had to wait a couple hours, several hours, before they could get out break even on their first buy and with a profit on their lower buy. This has much more energy than today, and we got a measure move up. Same thing, big breakout, small pullback bull trend. Today's more like this, breakout, but deep pullback. Breakout and then sideways, breakout, sideways for over an hour, breakout. So I think today is going to be like any of these, where we go higher, but not much higher. 3 bear bars, 5 bars without a bull body. Low probability stop entry buy, unless you're willing to use a wide stop below 9 and scale in lower. Probably a minor reversal down, but strong enough so we'll probably get a couple legs sideways to down. So we're probably in a tight trading range here. Always in long, target above, but 5 bear bars, probably sellers here, and we enter a tight trading range. A lot of the bulls will wait for a second entry buy, a double bottom with 30. Bulls are hoping that, like Friday, we get a relentless small pullback bull trend out of this. And we might. I don't think we will, but we might. I think today's going to end up as a trading range day, and we'll probably close around the open. Here's the low of the day. Open of the day, probably a magnet, and measured move up is 1 tick above the high. I think probably sellers somewhere above the high of the day, and that the breakout above Friday's high will fail, and that today will not. do what we did on Friday. But if it does, then traders will buy closes, buy reversals, buy bull flags. Bears want a triple top. It's also a triangle. I think the odds are against a successful breakout and measure move up. I think more likely today's going to remain a trading range day. Lots of reversals. 1, 2, 3, 4, 5. That reduces the chances that we're going a lot higher. We broke above the 18-bar range. That reduces the chances that we'll get down to the low of the day. So the market is looking for a top of the range. I think it's a little bit above where we are, but not a lot above. Close of the third hour, bar 36. So far, we've had 3 doji bars today, but we're trending up. Can you sell right here, 26 high? Probably okay, but you might have to risk 3 or 4 points. Can you sell with a stop below 36, failed breakout high of the day? A swing short, which means it's probably not going to trend down. Channel fairly tight. Not an exhaustion breakout, so there's not a lot of there are not a lot of bears eager to sell. Nested wedge, small wedge, 31, 34, but sell signal bar 36, bull body, failed breakout yesterday's high, but bull body, tight channel. We're 16 ticks above 9, 90% chance for going at least 1 tick higher. Whenever you have a move that goes up 16 ticks and you have a decent buy setup with a good buy signal bar, 90% chance you're going at least 17 ticks, and therefore probably buyers below 36. This has, I think we're going to get a reversal, and probably soon. But I think it's going to remain a trading range day, and it's probably going to close around the open. Starting here, we've had many, many reversals. Bulls have a breakout above the 18-bar high, above yesterday's high, but neither breakout is very big. Limit order bears who sold the high of the day made a 1-point profit. Do I still think we're going 1 tick above 36 high? I do. But I also think we're not going a lot higher. I think this entire rally is a bull leg in a trading range day, and that will either go sideways or down for the second half of the day. Probably mostly sideways. It's probably going to be like this: reversal up, new high of the day, and then sideways, 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 sideways. This day, a lot more buying than what we have today, yet it's still entered a tight range. Strong reversal up, yet still sideways. Sideways to up. We do not have this kind of strength today, so I think the odds are against a significant rally. I think this is our future. GoPro. They make that camera that people use when they're doing sports. When it came out, it rallied crazy, up to almost 100. Now it's down to 6. This is a fairly common thing, when there's a lot of hype about a new company. Blue Apron, that food company, same thing. Snap, same thing. Snapchat. The guy who started this was in his 20s and kind of like a skateboarding surfer bum type guy. And he became a billionaire. And he's much less rich right now. They put him on 60 Minutes and they made it sound like he was going to get a television show with GoPro, like America's Funniest Home Videos. And that's why the market rallied. And then it became less likely he was going to get a TV show. And then other companies started selling products that are just as good as his, and that's where he is right now. He has a good product, but there are a lot of competitors that are just as good, and this tells us that traders do not believe that it's going to be an incredibly profitable business. It's just a commodity. He's selling a camera. Everybody else is selling a camera. His is not much better. And now the market's trying to determine what a fair price is for his product. Tight trading range for over a year, 2 years, bear breakout. Bulls are hoping that this is an exhaustive sell climax and that we found a low around $5 and that we're going to reverse up from here. But I don't know. It's unfortunate, but this is the reality. When you're selling a commodity like a camera that everybody else can duplicate, you have an advantage when you first come out. You came out with a new idea, but it's an idea that everybody else can copy and do as well. I'm talking about this being possibly a reversal day. Strong rally, 10, 10:30, reversed down, closed near the open. Became a doji bar on the daily chart. Rally till about 9:30 or 10, and drifted back down to the open. Rally for the first 3 hours, big reversal. Parabolic wedge, reversal day. The bears tried to get a reversal day, but it resumed back up. Still always in long, still a magnet above 18, 17, and 18 ticks above 9, but probably sellers not far above the high of the day. A lot of the bulls who bought 1 tick above 9 will take at least partial profits at 4 points. Bulls still hoping for a strong breakout, but more likely there'll be sellers somewhere above the high of the day. I said that 90% chance if it goes 16 ticks, it'll go 17 ticks. However, if we get a double top at 16 ticks, then the probability of 17 ticks just goes away. I think the double top would take away that magnet. To sell below 40, I think the bears would want the bar to close on its low. Even then, still probably buyers below because we still have that magnet, but it's no longer a 90% magnet. I have this red line drawn at the open because I think that's where the market is headed at some point today. Because I think today is going to be a reversal day. I'm just highlighting the open of the day. A lot of reversal days, even with strong rallies, come back and test the open at some point. Will the bulls take profits at 17 or 18 ticks, or will other bulls buy aggressively, creating a breakout for a measured move up? I think 60% chance the breakout attempt will fail, 40% chance it'll succeed and will do something like this, maybe 30% chance it'll be like this. Limit order bears selling 26 high needed a 5-tick pullback. They got 4 ticks. Limit order bears not making money lowers the probability of bears making money selling the 36 high. Small range, hard for the bulls to make money as well. Bulls buying the 26 low, 1 point lower. It took 6 bars to make money. Bulls buying the 36 low have not yet made money. Goal achieved, 17 ticks above the 9 high. Now, are we going to get a breakout and a measured move up, or are we going to get profit taking and then the start of a bear leg? Rather than a bear leg, I think more likely we'll get a trading range. Like that. Like that. Today we've had a more protracted trend, so there's more chance of the rally just lasting for the rest of the day. But this rally is much stronger than today, so today is less likely to rally like that for the remainder of the day. More like this. If the bulls get a rally, it probably will not get very far. This right here is a test. Is it going to break into a strong bull trend, or is it going to continue in a weak rally and then possibly a trading range? The bulls need the breakout here. They need 59.60 like yesterday. Should be at least partial profit taking from the bulls up here. The bulls who bought above 9 could exit with 4 points profit, but very tight channel, so low probability stop entry short below 42. If it's a good sell signal or closing on its low, it's a reasonable swing short, but when a channel is tight like this, the reversal down is usually minor, and the best the bears probably get will be a trading range and not a swing down. Bulls trying for their breakout. Nobody wants to sell because the channel is so tight. And I think one of the reasons why I did not sell is the bears who sold the 26 high did not make money with a limit order. And I don't like to sell unless the limit order bears are making money. Bulls trying to do this at the top of a trading range. Bulls trying to get a breakout and at least a second leg up. They might get a measured move up, but I think the odds of today turning into a small pullback bull trend like this are maybe less than 40%. Too many prominent bear bars. We had a lot of bear bars here. Then we had a pretty good breakout here. Today we have not had this kind of strength. We had this, but that is not as strong as this. So higher, but probably not a big move like this. I still think this is going to be followed by a bear leg, and we'll get down to the open at some point later today. Four points above the open. So if you think about it, what's the chance of this going up 4 points from here before going down 4 points to here? I think it's more likely. I think it's better than 50-50. We're going down 4 points to here before we go up 4 points. The reason why I'm looking at it that way, I think we're going down to the open. So for me to think that, I have to be at least 60% certain. And that means, if I'm thinking about it in terms of risk reward, if I want to get a neutral risk reward, I want the risk equal to the reward, and the reward is 4 points. And so if I want an equal risk, it'll be 4 points. So I think that 60% chance we'll get here before we go 4 points higher. Let me just put up a marker 8 points above this, so it's 48. Obviously, if we get a strong breakout here, that would change things. So 40 and a quarter. So 40 and a quarter, 44 and a quarter, 48 and a quarter. So I think we'll get here before we get there. Bulls trying to do this 59.60. They're trying to get consecutive bull bars. If they do, then we'll probably get at least a second leg up. Some bulls will buy the 43 close. Other bulls will wait for a second consecutive bull bar. Sometimes I'll sell with a limit order 4 points above the open or 5 points above the open if I'm seeing the bears making money and I think the day's going to get back to the open. I still think today's going to go back to the open, but the bears are not making money, so that's why I did not take this sell. Globex high is all the way up here. I don't think we'll get there, but we might get to the top of this sell climax. Breakout and follow through, odds are we're going at least a little bit higher. Not a particularly big pair of bars, but the context is good. Minimum target is here, so a lot of the bulls buying want to buy at least 5 ticks below there so they have room to make a point profit. The bears want a failed breakout, but consecutive bull bars closing on their highs, a magnet above. We're probably going at least a little higher. Bears want a failed breakout, but 8-bar bull micro channel, consecutive bull bars closing on their highs. Most bears are not going to short below 45. Bulls know there's a target above, and if you're buying at this point, it's probably better to buy at least 5 ticks below this high so that you have room for the market to reach the target and make a 1-point scalp. the bears failed breakout. Bought it right now. Bought a 8-bar bull micro channel. Most bears are not going to sell below 45. Probably we'll get at least a small second leg up after 43, 44. Bulls are hoping that we get several legs up like Friday, but I think the odds are against it. No matter what 45 looks like, probably buyers below for at least a small second leg up. Possible high of the day, so you can always sell it, but low probability. Better to wait for a second entry sell. Above that Globex sell Climax high. Next target will be the Globex high. No sign of a top. Bulls want the day to become a small pullback bull trend day. It is a small pullback bull trend here. They would like to get a measured move up based upon the height of the wedge. While it's possible, I still think the odds are against it. Still by the close, still no way to make money selling. A lot of the by the close bulls here scalped out. I'm back to flat and I can't sell, and I'm hesitant to buy because I'm not confident that we're going a lot higher. When that's the case, I look to buy pullbacks. Best looking bull bar in 20 bars. Therefore climactic, and a lot of the bulls will wait for a couple legs sideways to down like this. Whenever you get something that's climactic or extreme, a lot of the bulls wait for a micro double bottom before looking to buy again. I have the measured move based upon the entire wedge, but it's possible that the market might be simply doing it based upon this opening range. So the market might view this as an opening range, this is the breakout, and this is a pullback from this breakout, and therefore we might be at the measured move target, but nobody's going to sell when the biggest pullback over the past 10 bars has only been 3 ticks. 15-minute chart, I'm just looking for ways to draw possible channel tops here. Let me go back to the 5-minute. Looks like we have a channel top a little bit higher, and that measured move based upon this 18-bar range. Globex high is all the way up there. Actually, it's at the same price, right around $24.48. So it looks like we're getting vacuumed up to that area. Strong enough breakout, even though it's a parabolic wedge, 1 pause, 2 pause, 3. I would not sell. Not until we start to go sideways and start to get some bear bars. By the close, bull trend often gets a gap up. They open of the bar above the close of the prior bar. That's a sign of very eager bulls. They see a breakout, they see the absence of a bear bar, and a lot of them just hit buy the market. And so many traders want to buy, you get a gap up. Parabolic wedge, but bears not making money, so probably buyers below. Plus, we have a target above, a couple targets above. Probably the best the bears get is a pullback. Sometimes the market pulls back into 1130. Therefore, we could get a tight trading range slope slightly downward for 10 or more bars. I think it's too early to sell. Suppose we get 3, 4, 5 bear bars, then we'll have big up, big down, and then I'll think about selling. Parabolic wedge, sometimes you get an endless pullback, but the downside risk is usually small until after the pullback has lasted at least 10 bars. Kind of like this. Usually you don't get a bear reversal until the pullback has lasted at least 10 or 20 bars, and even after it has lasted 20 bars, only a 40% chance of a bear breakout and a reversal. You can see they're buying below everything, 48, 49. Because it's a parabolic wedge and because we're in the middle of the day, 10:30, 11:30, we might get a couple legs sideways to down to the moving average, but it's still always in long. Because of the parabolic wedge, traders buying here, 48 low, 50 high. I think they need to stop down here. We might get a couple legs sideways to down to the moving average. Odds are we're going at least a little bit higher, maybe up to the Globex high. Here's the measured move based upon that wedge. I don't know if we'll get there. Do I still think we'll get down to the open of the day? Not after this breakout. I'd say the chance of it now is 40%. Even though we're sideways for 6 bars, the pullback's only 5 ticks. And therefore, I think it's better for the bears not to sell yet. We may go sideways to down to the moving average, maybe even the bottom of this channel before we make one last run up to the measured move target and the top of the channel. We have a 3-day channel. A lot of room up to a measured move based upon this gap. Tight trading range, so bears might start selling above bars. We have a couple targets above, and we might get to the targets, I don't know. But to me, this is starting to become neutral, and we have targets above, and therefore we're probably not going a lot higher today. We may go a little bit higher. Is it worth shorting? Well, just look back. The biggest pullback has been 5 ticks since bar 30, so that's a long time. So anyone selling for any reason probably still needs to use a wide stop, maybe 3 points or so, somewhere above the top of the channel, several ticks above the top of the channel. And for the bulls, to me this is a tight trading range. Even though we're always in long, I'd rather be buying lower. The bulls have bought the 48 low, needed 5 ticks. So far they have 4 ticks. So far the bulls have bought the 48 low are trapped. They can still get out with a profit, but it looks like a lot of them are trying to get out with 1 point. It looks like we have a lot of sell limit orders here at the 56 high, which is 4 ticks above the 48 low. And that means that a lot of the bulls are looking for a 1 point scalp now instead of another swing up. So we're starting to transition into a trading range. Testing the Globex high. Bears want a double top, bulls want the breakout. We have a strong breakout here, 15-minute chart, likely to get a second leg up. And sometimes the second leg up is just a small bar. So this meets the requirement of a second leg up. The problem the bears have is the biggest pullback has been 5 ticks in over 20 bars. And that means it's impossible for bears to make money. It's usually better not to sell until you see bears making money. Do I think the bear selling right here will make money? I do, but I would rather not start to sell until I see them actually make money. The bears need to reverse this breakout, and they might. It's possible that we get a surprise breakout down here. It's not likely, but that's what the bears need. Some bears will sell the 48 high, but I think think it's usually better to wait until we see limit order bears making money than taking the short, hoping that this is the first time the bears will make money. Remember over here, I made the point that the limit order bears did not make money selling the 26 high, and therefore I did not want to sell. And it's still that way, but I think, I think the odds are the bears who did sell 48 will make money, but they may have to use a 3 or 4 point stop and sell more higher. The 48 low bulls made money. It went up 5 ticks, which is what they needed, and it pulled back. Because it pulled back, it tells you that a lot of those bulls were buying for a 1 point scalp, which means they're not confident that it's going any higher. They were confident they would make 1 point, but they took their profits at 1 point, and that's because they were not confident they could make more than 1 point. What happens down at the moving average in the bottom of the channel? Well, I don't know. The bears are trying to reverse this breakout, and they might. But I would not sell at the market, and I would not sell with stops. The sell was the 48 high, but not yet a particularly high probability sell. It's climactic. A lot of the bulls will wait for a couple small legs sideways to down before buying again. This is the end of the 5th hour. We had 3 doji bars on the 60-minute chart, and then a breakout. So this 5th hour is the follow through, and so far it's bad follow through. That's the close of the bar. But tight bull channel, the best the bears probably can get is sideways to down for 10 bars or so, which is about a day and a half. I am flat. I thought about selling the 48 high, and I chose not to do it because the pullbacks were only 5 ticks for over 20 bars, or about 20 bars. 3 consecutive bear bars closing on their lows, but only 2 tick tall bear bars. I think we're probably going to go sideways to down more, and that the limit order bears 48 will make money. The stop order bears 58 might make money, but I am flat. I want to see more strength from the bears. I earlier mentioned GoPro, saying that it was a very unusual day. Huge volume, huge sell-off, and huge reversal. So that's good for the bulls. That's important. 5 ticks below 48, so the limit order bears finally made money, which they have not done since they sold the 13 high and sold more 1 point higher. Even though 4 consecutive bear bars, I would say still always in long. We're still above the moving average. But I would not take much from the bears to flip it. I think they got to get a couple bigger bear bars, and they got to get below the moving average. Because of the 4 consecutive bear bars, a lot of bulls will not buy above 62. They'll wait for the market to get a micro double bottom like 30, 33. The 4 consecutive bear bars will make a lot of the bulls hesitate to buy above bars, and it will encourage bears to sell above bars, and therefore the bulls probably will need at least a micro double bottom. Bears made money selling 48 high. They probably will sell the 58 high. The bulls are hoping for a surprisingly strong breakout, but probably not going to get it. If they do get it, my guess is there'll be some profit taking at the end of the day. Getting near the measured move based upon the height of the lower range. So since it's at the same price as the measured move from this double bottom, maybe we will get there. It'll also be around the top of the channel. So probably sellers somewhere around these measured move targets and the top of the channel. The bears double top, but I think it's better to be selling with limit orders 57 high or higher than with stops below 64. And for the bulls, they're hoping that it goes beyond the measured move targets, but I think probably not. So bears will either sell 57 high and 1 point higher, or simply 1 point higher, or 1 or 2 ticks below the 2 measured move targets, and they're only looking for a scalp. Spike pullback channel near the top of the channel. Small expanding triangle. You can see traders were pretty eager to sell the 57 high. Most of them will look for a scalp. Can we get all the way back down to the open? Not likely, but we're so overbought that I would not be surprised if we get a sell-off here at the end of the day. Early in the day, big bear bars, bulls were buying the close. They bought the close of this one, and these two, the bulls were so eager to buy that they bought the market as soon as the bear bar closed, and you can see there were so many bulls doing that. The 2 bars opened above the close of the bear bar. Here we have an expanding triangle. We're in the neighborhood of the targets. I think most of the bears are scalping, selling above bars. You can see here we are 3 minutes into this bar 70, and we're not going down. So that tells you that there's not a lot of aggressive, eager bears willing to sell low. We're also at the bottom of the channel. Can you buy above 70? I don't know. I probably will not. We got a small expanding triangle top. It's a trending trading range day. We have well, you can call this the range here. You can call this whole thing the range, and then a breakout and the upper range, but a big gap between the two. Sometimes with the trending trading range day, you do get a very big gap like that. It usually ends up closing the next day. This one closed that day. 60% chance the gap closes the same day. Today's going to be one of the 40% times when it does not. Here we never dipped back below the, here we exactly hit the top of the lower range. tried to get back into the lower range and got a bull breakout. Not a good buy signal mark for the bulls, but minimum follow through for the bears. And now we're at the bottom of a 2-hour trading range, so not a good location for selling and not strong enough, I think, to buy. So I think we're probably always in short. I always prefer to see a close below important support, like the 63 bottom of the trading range, but it's a big enough bar to make me think it's more likely we're going to get at least a small second leg down. Am I short right now? No, to me the sell was the 57 high, not at the bottom of the range, and I did not buy. I thought these were decent buys. I think this one is not. So I think it's more likely that if we're going to break out of this range, it's more likely we'll go a little bit lower. It's possible we get all the way down to the lower range, but I think that is unlikely. I think more likely we're going to stay pretty much sideways. Expanding triangle tops, often followed by expanding triangle bottoms. I'm not sure that it's worth buying above 72. The bulls are hoping that this sell-off is a bear trap and that we're going up to a new high. But I think we're probably not going to go very far one way or the other. Limit order bears have sold the 69.70 close. No profit yet. It had to fall 5 ticks, only fell 4. So not very bearish. Expanding triangle bull flag, but 5-bar bear micro channel. The bears are not getting much of a sell-off. It fell 5 ticks now below 69 close, and it looks like the bears are buying back their shorts. But I don't know that it's worth taking a stop entry buy. For scalping like this, I typically do not buy with a stop. However, I'll often buy with a limit order, especially when I get a second bull close like this on the reversal. So I just place a limit order to buy the close and try to scalp out for 1 point. And it looks like probably a lot of bulls did that. Here we are. Okay, the stop order bulls just got their money as well. This sell-off, I mentioned that a lot of times if you have a bull trend day, you get a sell-off late in the day, and it traps bears into thinking that the market's going to be in a bear trend, and then at the end of the day, the market rallies back up to the high. This is an example of that. Bear trend day, measured move down, small pullback bull trend day, finally got a pullback that's twice the size of the biggest earlier pullback, and it trapped the bears. The market rallied back up at the end of the day. Same thing here, late sell-off, trapping bears, rallied up. Small late bear trap, trapping bears into thinking the top was in. This is the one that's most like today, a small pullback bull trend day, a pullback twice as big as the earlier biggest pullback, and the bulls bought it. This is the biggest earlier pullback, right? And now we got one, it's only about 50% bigger. Usually you get, this one was 50% bigger than all the other ones prior to bar 30. And then this one was 50% bigger than this one. Will we go much above the high? I don't think so. I think, we'll stall out right around where we are. Trending trading range day, lower range breakout. The bears tried to get back into the lower range and they failed. But this is probably going to remain a trending trading range day, and we're probably not going to go much above the high, if we go above the high at all. And I did not sell the 69 high despite a bigger expanding triangle. Now we have 7 legs in the triangle, 1, 2, 3, 4, 5, 6, 7. But I'm not selling with limit orders this late in the day. Even though I know the math, I know this is probably an upper trading range and a trending trading range day. And it's probably going to be similar to this, not going far above the high. About 55,000 contracts or so, bar 78. Let me take a look at what happened with GoPro at the end of the day. Reversed a lot of the selling, but closed with the bear body. But not a bad bar for the bulls. It looks like a lot of the bulls thought there was good value down here. So it's still possible that this could be the end of the selling, which has been going on since it went public. We've sold off, it was up close to 100 and it fell almost to 5. So it lost, like 95% of its value after the initial euphoria. I had friends years ago, I used to trade with them online, and they used to make me really nervous. And they would look for IPOs like this. And then when it starts to rally strongly, they would start selling. They would go short. And there was a group of them, there was a group of guys, I don't know if it was 4 or 5. And they used to build pretty good sized positions, like $200,000, $300,000, $400,000. So to me, it just doesn't suit my temperament. They would love something like this, so they would short it, $200,000, $300,000, $400,000 worth of going short, assuming they could even short it. A lot of the IPOs you can't short because not enough people own the stock and your broker doesn't have the stock to let you short it. But anyway, so they'd short it, and I don't know if they'd hold it all the way down here, but if they did, they'd be shorting $200,000 worth of stock, and they would end up making a lot of money, like $150,000, $170,000 or something. So they make almost 100% of their initial investment. Warren Buffett talks about people going short, and he said that he's never met. He said he knows a lot of the richest people in the world, and none of them was a short seller, or none of them is a short seller. And it makes sense, right? You're kind of limited in what you can make on a short. The most you can make is 100%, but on a long, you can make 1,000%, many thousand percents. And, so Warren Buffett's comment is that he'd much rather buy stock that's good and hold it, for years, possibly decades, if it's a really good company, because you can stand to make much more being long than you can make being short. E-mini, even though today is a pretty good bull day, it's actually a tiny day compared to last week. We had 4 days, very strong days last week. The first day was a big reversal. We had a big gap, a big sell-off, and then a big reversal, a 2-bar reversal on the daily chart. Odds were we were going higher. And then you got the January barometer people who like to look at the first 5 days of trading in January, and then they claim it gives us an indication as to what the year will be like. And, so here we're strongly up in the first week. And I think it's foolish to conclude that we're going to be strongly up for the rest of the year. I think that, we're in a parabolic buy climax, weekly chart right here. The biggest bull bar late in a bull trend, certainly the biggest bull bar in 50 bars. It's more likely an exhaustive end of this trend than the start of a new leg up. So it's more likely an exhaustion gap than a measuring gap. Minimum goal for the bears is a test of the bottom of the buy climax, which is last week's low. And if we get there, the bears will try to get a measured move down, which would be about a 150-point correction, or about 5%. But no sign of a top yet, other than this bar from last week, which is unusual. And it's probably an exhaustive bar. A lot of times you get a pullback for a bar and then one more leg up, and then you get the final top. But in either case, I think last week is telling us that the weekly chart is going to start to correct for, probably a couple of months. When you get these exhaustion bars, you usually get about a 10-bar 2-legged correction, and 10 bars on the weekly chart is 2 months. On the 5-minute chart, we had a parabolic buy climax Friday. We knew that there was a 50% chance of some follow-through buying today in the first 2 hours, did not get it. We got followed through buying in the fourth hour, the start of the fourth hour. And we knew that there was a 75% chance that the market would go sideways for at least a couple of hours, and the trading range would begin by the end of the second hour. Sometimes it begins on the open, and sometimes it begins on Friday. But we were sideways through the first 35 bars, 36 bars, first 3 hours, and then we got a breakout, and then sideways again. So a trending trading range day. It was also a small pullback bull trend day. Since bar 9, the pullbacks were pretty small, especially since bar 15, the pullbacks were very small. From bar 30 up to the top, the pullbacks were only 5 ticks. We got an expanding triangle top, and then an expanding triangle bull flag, and then a bigger expanding triangle top, and an upper trading range. We had a late bear trap, big enough sell-off 69, probably at least a small second leg down. But when you have a small pullback bull trend day, the market often tries to get a bigger pullback later in the day, like 50 to 100% bigger than the biggest prior pullback. And I think the small pullback bull trend began here, and up to this point, certainly from here to there, the biggest pullback is only 5 ticks. This is a little bit bigger. And then at this point, the biggest pullback is here, and this is about 50% bigger than that. Early in the day, I talked about Friday. We had a big bull bar, bear bars, bull bar, and then today we saw multiple reversals like that. Made it likely that we were going to go sideways for an hour or two and then decide on a direction. The bears would try to get some kind of a major trend reversal top, like a lower high or a double top lower high or a wedge. And the bulls would try to get a bull flag, usually a double bottom or a channel. And the bulls won. The breakout 43, 44, not impressive. And it did not go up very far, but it's still the bulls winning. And the market traded up relentlessly since the too low and a small pullback bull trend. For stop entries today, I thought selling below 1 and selling below 5, you can make a case for a lower high major trend reversal, but with the 2 bull bars, probably buyers below, same with below 7. And then the bears have a double top with 1 and 7 and a bear bar 14, but they had 5 bull bars. The odds were there would be buyers below. And then for the bulls, buying above 3 turned out to be the low of the day and never went below the 3 low. Or buying above 9 were okay swing trades. I thought we were going to go up 4 points, which we did, and then we broke to the upside and went up even higher. By bar 18 here, the first 18, the high of the first 18 bars was the bar 13 high. We got a breakout, but not a very strong follow through. And we got a second entry buy above 30, above 32 or 33, not good, and then above 38. I thought it was probable that we were going to stay mostly sideways, but then we got 43, 44, and that made me think we were going up for at least a couple legs, which we did. So 1 pullback 2. We had a parabolic wedge through here, and I thought we would have a couple legs sideways to down, 1 pullback 2, but probably a minor reversal, sideways to down for 10 bars. The bulls tried to resume, could not get very far, tried to resume again here, could not get very far. Stop entries for the bears today. I don't think I took any. I did not take any stop entry shorts. You could sell below 5, 7, or 12, but I thought they were all bad. And below 26, 27, some tight channel bull, probably a minor reversal. And even below 58, it's still a small pullback bull trend, so a low probability trade. And then below 67, you can see some traders took the sell, micro double top, expanding triangle. For me, I was selling with limit orders above bars and not stops below. Stop orders for the bulls, I thought the first reasonable one was above 7, and then all of these were pretty difficult, buying above bear bars 15, 19, 23, a bear II, and then to 30, 34. The reasonable, the next easier one was about 38, but you're buying at the top of a trading range, and the odds were against the market going a lot higher. Then buying above 51 made sense, but you had to wait a lot of hours to make money. And then buying above 73 if you wanted to take a chance that we were going to pop up to the high of the day. We probably were not going to go much higher. Buy the close, sell the close. I thought we never went always in short. In fact, at any point today, you could argue that maybe we were always in short 69 because we were likely to go a little bit lower, but we probably were not going a lot lower. Sell the close. Now look at the 2 close, the 8 close, the 15 close, the 30 close. I thought they were more likely buys than sells. You know, I talked about how the bears needed one more bar 8, one more bar 17. And here I said pullback, but it's a 50% pullback to the moving average. 3 bear bars, it's not enough to make it short. Here we had 4 consecutive bear bars, but not enough to make it short. 69, a surprise bar, probably a little bit lower, so maybe it was in short, but I doubt we were going lower. So the sell the close bars, 8, 15, were more like, it was better to trade them by the close. And you can see as soon as 8 closed, 9 opened above the 8 close, 16 opened above the 15 close. So the bulls bought those closes, betting that the bears would not get the one more bar that they needed. And then by the close, bar 4 by the close, and then 11, 12, 13 by the close, but probably a trading range. And then 43 probably, and then 44, 45, 46, 47, 48. Those were all okay by the close. There's still room to resistance at the top of the channel and the measured move target. We finally got it late in the day. And then here, I would not buy or sell closes. You know, maybe you can take a chance, sell a close 58 or 59, but small pullback bull trend. I would not be selling below the high. I think if you're selling at the highs only. Limit orders, probably limit order bulls below 5, but not great to buy below a bear bar closing nearest low. Same with there. And the first limit order trade that I thought was reasonably high probability was buying the 13 low, and then the 17 low, the 27 low, the 32 low, the 36 low, 48 low. Here, I did not buy the 57 low because I thought I was looking for a second leg up, and I wanted to see what we would get. Parabolic wedge, failed breakout above its high. I thought we'd get a couple legs sideways to down. And then here, if you're trading with limit orders, you could be buying below things, selling above things, like selling above 48 or especially above 57 or above 67, a bear bar. And then aggressive bulls bought below bars, below 64. And, buying below 72, I think hard to do. 5 bull bars on the daily chart, and 4 of them closing near their highs. I think we're way overdone. And I think the odds are this week is not going to be a big bull week. It's going to be a small week. A lot of times after you get a big bull breakout week, you get a small week. And I think this week is going to be small. So maybe even a bear body. So something like that, or like that, or like this, or like this, or like this. I think it's probably going to be a disappointing follow-through week for the bulls. That does not mean we're going to sell off. There's no credible top. It just means I think the upside this week is small. Also on the 19th, Congress is voting on the budget, and that has a lot of uncertainty. If they cannot pass the budget, the government shuts down and the market will sell off. And I could see the market entering a tight trading range like this, or like any of these until next Friday. Question: what's a reasonable rate of return on a $10,000 account trading the E-mini looking for swing trades? I don't think of it in terms of percentages. I think of it in terms of average daily range. And I think good traders and really experienced traders who are scalping a lot are thinking in terms of average daily range. So if the average range is 10 points, a really good trader is going to be looking to make equal to the average day's range. So they'll try to make 10 points. A really, really good, aggressive scalper can make 1.5, sometimes 2 times the average daily range scalping. For swing trading, you're going to make less. However, I think if a person is pretty diligent swing trading, and let's say trading one contract, I think it's reasonable to average 2 points a day. So some days you'll make 7, 8 points, 9 points. Other days you'll lose 4 points. But I think a reasonable goal would be to consistently make 2 points a day, and that's $100 a day. That's $500 a week, right? And that's about $2,000 a month. And then so times 10 or times 12, it's about 200% a year. It sounds crazy, but I think if a trader can get reasonably good, it's a realistic objective. Now, should you be trading one contract with a $10,000 account? Well, if you're starting out, you have to trade one contract with a $10,000 account. However, I think once you start getting successful and your account gets bigger, you'll use less margin. So, for example, instead of one contract for a $10,000 account, let's say your account is now $50,000. You might only trade 2 contracts or 3 contracts. So your percentage goes down, your percentage return goes down. But, your trading skill and the different measures of your performance will improve. The chance of going broke, the chance of you losing your account will become significantly less, with experience and trading with less margin. Okay, can you talk about gold, the daily and weekly charts? Well, I think gold has had an incredible rally here. It looks like it's going to set up a cup and handle pattern. Whenever you get a reversal, this is the daily chart. Whenever you get a reversal and a pullback, that's a cup and handle pattern. So I think bulls are going to buy the first reversal down to any of the moving averages, the 50-day, the 200-day. We have a breakout above these above these highs. So maybe we'll pull back below these highs, 1,300. But I think the odds are there'll be buyers there, and we'll get at least a small second leg up. And weekly chart, not so clear. It's a triangle, lower highs, higher lows. The dominant feature is this very, very strong reversal. The bears tried to sell off, could not get below this low. So when I look at this weekly chart, I think even though we're in a triangle, and we've been sideways for over a year, the dominant feature is this very strong rally. And I therefore think, even though a triangle is close to 50-50, I still think the odds are better for the bulls. Monthly chart, basically a tight trading range for 5 years, but a pretty strong reversal and a higher low major trend reversal. Monthly chart to me looks more neutral. Higher low major trend reversal, but we got a minor reversal, a trading range instead of a bull trend. Most bullish chart is the daily chart, and I think traders will buy a pullback. 50% pullback to the 200-day. I don't think we'll get there. Or a test of this high, I do think we'll fall below these highs. So around 1,300, I think bulls will buy. And then we'll find out, is it simply going to be a trading range around this high, or is it going to be the start of a swing up? I think part of this is Bitcoin. I don't hear anybody saying that, but my thought is, theoretically, a lot of the bears were concerned that Bitcoin would replace gold as a storage of value. And this is a sign that the gold traders are thinking that Bitcoin is not going to be a really good replacement, and it's not going to take much from the gold market, at least near term. So I think this is a reaction. This is a fear of Bitcoin, and this is deciding that Bitcoin is not all that big a threat to gold. Question about the dollar versus the 15-minute dollar versus the Canadian dollar. Okay, question. I sold the 15-minute chart at 7:45. Okay, possibly down here. I cannot see the whole question, so I gotta play with the window. Okay, I sold the 15-minute chart at 7:45. Used a wide stop betting on a new low. Any thoughts? Yeah, I have a couple thoughts. When he said he sold the 7:45 bar, I don't know if he sold up here, if he sold down here, if he sold as it was forming. But I gotta wait for stupid TradeStation to load more data. Okay. We had an extremely strong sell-off here, and then you can argue a wedge bear flag and a very strong reversal down here. But really basically a trading range for a lot of bars. And we're channeling up with higher lows. So in my thought, if I'm selling, I'd rather be selling with limit orders above things than selling closes where we're possibly getting a higher low in a bull channel. So for me, I would not have sold there. I understand you got a bull breakout and a reverse down strongly, but if it's a bull channel or a trading range, which it is, I don't like to sell too far down in the channel or in the trading range. I'd rather wait for it to break below. If this was down here below everything, I would be much more interested in selling the close. But if we're in the bottom half of a trading range or near the bottom of a channel, I would just say, okay, let's say I didn't short up here, right? And let's say I didn't short on the way down, and then my choice is to short here. I personally would say I missed the trade. I don't want to be shorting at the bottom of a channel, even though we have this huge sell-off here. I just don't do that, because the probability is instead of breaking strongly to the downside, we're going to stay in the channel. Or you can say it's basically a trading range tilted up slightly. The odds are we're going to stay in the trading range. For me to be selling at the bottom of anything, I want that thing to be below a major higher low, not just above, because too much risk of exactly this, no follow through. So had I sold that close and I saw this bull bar, I would have gotten out just above that bull bar. Can you be still holding short, betting that this reversal is a 50% pullback from the sell-off? Which it is, right? And holding short, put a stop up here. I would not. We got bull bar here, a good bull bar here, a couple of bull bars here. I would just get out and take the whatever it is, 20 pip loss and wait. It's really easy to look at one bar and then you say, oh, it's a bear trend, this is a bear flag, and this is a resumption of the bear trend. But I pay attention to all of these bars as well. And my concern is we're in a bull channel, and it could go all the way up to the sell climax high. And if I'm selling, I have to be selling at the top of the channel, not near the bottom of the channel. Okay. I'm going to be away on Wednesday, Thursday, Friday this week, and Monday is a holiday as well. But I do think that we're going to start entering a tight trading range But to me, this looks like a bull flag with pretty good momentum. So I think we'll probably go a little bit higher. I don't think we're going to go a lot higher before we start to go sideways like this, probably into the vote on January 19th. That vote has already been postponed at least 2 times that I know of, and it's entirely possible that they postpone it again. However, the market might not like that, because the market might feel that they're postponing it because they do not have enough votes to avoid a government shutdown, and therefore a government shutdown is likely. So if they postpone it again, I could see the market treating it as if it's a government shutdown. So I think they have to take the vote and they have to pass the vote. But as I said, even if they pass it, I still think the odds are we're going to start a pullback, simply because the daily, weekly, and monthly charts have never been this overbought, never in the history of the stock market. The Dow Jones stock market goes back 130 years. It's never been this overbought. And the S&P goes back almost 100 years. It's never been this overbought on all 3 time frames, daily, weekly, and monthly charts. So the odds are it's going to be less overbought starting pretty soon. Okay, hope everybody has a good night.